and good afternoon, everyone. I want to welcome you to InCorp's Changing Landscape of Corporate Governance, the essential role of nominee directors and compliance. My name is Camille, and I am your host and MC for today's webinar. Before we introduce our speakers, I would like to take a moment to share some information about our company, InCorp Global. We are the leading one-stop corporate solutions provider and business advisory group in the Asia Pacific region for company incorporation, corporate secretarial support, taxation, accounting, compliance, and risk assurance services. For more information, visit our website at www.incorp.asia. Now, just a few housekeeping notes before we get started. If you have any questions for the speakers, please feel free to submit them anytime during the webinar by clicking on the Q&A icon at the bottom of your screen. After the presentation, we will have a 10-minute Q&A portion where our speakers can answer the questions you have submitted. Now, we do apologize in advance if we are not able to answer all of your questions due to the time constraints. In the event of any technical issues during this session, we seek your kind understanding and please bear with us while we rectify the issue. Lastly, we will also record this session and share the recording plus the summarized key points with the participants in due course. I am well excited to introduce our first speaker, Mr. Li Huixiong, the head of InCorp's Corporate Secretarial Services team. With over 20 years of experience, he specializes in corporate compliance, company registration, IPOs, and corporate restructuring and various corporate actions. His diverse clients include private limited companies, financial institutions, XGX-listed companies, offshore companies, VCCs, and not-for-profit organizations. He will then be followed by our second speaker, Mr. Michael Dawson, the Chief Compliance Officer of InCorp. With over 20 years in public service, Michael's area of expertise lies in compliance, and his role is crucial in overseeing the existing and emerging regulatory compliance requirements. Now, before we dive into the webinar, here's a quick overview of what to expect from our two expert speakers. The first section outlines the requirements for a local resident director and the appointment of a nominee director, which will be covered by Huixiong. The second part outlines the following topics. 1. The impact of the new Corporate Service Providers Bill, or the CSP Bill, proposed by ACRA. Second, the common offenses and challenges to nominee directors. Third, the evolution of the role of a nominee director. Lastly, our session will end with a question and answer portion. Now, without further ado, let's welcome Huixiong, our first speaker, to kickstart our webinar.
Hi, good afternoon, everyone. I will start by giving an overall view from the compliance perspective. First of all, the regulatory compliance. Singapore laws mandates that every company must have at least one director who is a resident of Singapore. This means that the directors must be a Singapore citizen, a Singapore PR, or holders of an entry pass or even an employment pass. This ensures that there is someone locally accountable for the company's action and compliance with the local law. Secondly, accountability. Having a local resident directors ensure that there is a responsible party within the jurisdiction which can be held accountable for the company's operation. This is crucial for the regulatory oversight and enforcement. Of course, ease of communication. A local director facilitates smoother communication with local authorities and stakeholders. They can attend meetings, handle legal matters, and respond promptly to any issue that arise. So why do we actually have to appoint nominee directors? First, we have to meet the legal requirement. For foreign entrepreneurs or companies, appointing a nominee director is the practical solutions to meet the local residency requirements without having to relocate to Singapore. Secondly, privacy and confidentiality. Some business owners prefer to appoint a nominee directors to maintain privacy. This keeps their names off public records, which can be beneficial for confidentiality and tax planning. Next, professional expertise. Nominee directors often come from corporate service provider and bring along professional expertise. They can help to ensure that the company adheres to local regulation and maintains good corporate governance. Lastly, on the fourth point, continuity and stability. In cases where the foreign directors are not always present in Singapore, a nominee directors can provide continuity and stability in the company management and operation. Let's look at some of the bills that the Parliament passed on the 2nd July 2024. First of all, the ACRA Registry and Regulatory Enhancement Bill. Next, the Corporate Service Providers Bill, and also the Companies and Limited Liability Partnership Bill. So with all these 2024 bills, what is actually the aim of the government? First of all, ACRA bills aims to better protect personal data, whereas the CSP and the CLLP bills seek to deter misuse of corporate structures. The CSP bills also enhance the regulatory regime, and the CLLP bills enhance the transparency of companies and limited liabilities partnership. So with all these 2024 bills, it definitely will improve the Singapore compliance with the FATF recommendation, able to enhance Singapore's reputation as a safe and trusted financial hub. Of course, to address risks by the misuse of nominees, to facilitate crime, and also in the ways that all these 2024 bills will propose measures for nominee director as well. Some information about the corporate service provider bills are as follows. All entities or persons providing CS service to be registered even if they do not transact with ACRA. Increase maximum financial penalty for CSP and RFAs. Also, increase maximum financial penalty for RQIs. CSPs are to actually implement group-wide ML CFT policy, which also includes financing of weapons of mass destruction. There will be new fines for breaching the ML or CFT obligation for directors, owners, partners of CSP. And it is a requirement for CSP to conduct screening and perform risk assessment on their client. And also for us to actually to conduct screening against prescribed tools and perform risk assessment on our clients. CSP are also to provide ACRA with copies of STRS filed when requested. We also can see that nominee directors or shareholders, they are to disclose their nominee status to ACRA and information made to public. CSP also need to determine UBOs, even if the client is a Singapore government entity or foreign government entity. Last of all, CSP to ensure that NDs are fit and proper, satisfy prescribed training requirements if they hold more than a legally prescribed numbers of nominees directorship by way of business, of course, unless they are qualified person. So what are the impacts to CSP like us? We can see there are upsides of it. First, conscientious actions by industry players to combat financial crimes, financing of terrorism, and weapons of mass destruction. Public info for all nominee directors and shareholders, enabling banks and CSP to understand their clients better and conduct risk assessment on the right target. Mandatory use of tools, database, software to conduct screening for all clients and UBOs. Also, lessen the risk to the country as a place to facilitate criminal activities via its legal and financial system. So what are the downside to the impact regarding for CSP? First of all, there will be heightened financial and legal risk for CSP and its officers, directors, and owners. And there's always this increased cost of compliance, time cost, dedicated compliance team, data tools for screening, training of staff, enhanced screening processing, and risk assessment. Also, additional training requirements for non-qualified persons who act as ND for more than a legally predetermined numbers of companies. I shall now invite my fellow colleagues to touch more on the role of the nominee directors and also the risk involved.
Hey, thanks, Wei Xiong. Good afternoon, everyone. So my name is Michael. I'm the Chief Compliance for the InCorp Group. So today I'm here to share the role of a nominee director and the challenges that comes with it. I think the important question on everyone's mind may relate to what are the safeguards available to nominee directors and how can CSPs enhance its AML and KYC practices. Now, let's continue a bit from where Wei Xiong presentation where the requirement of a local resident director was intended for the main purpose. So number one was actually accountability. Number two is actually facilitating communication with the authorities. Now, this reminds me of an incident where I recall during my time at ACRA when I was part of a focus team workshop in reviewing our enforcement framework. Now, one of the ideas that was mooted was the issue of repealing Section 145 of the Companies Act requirements. Now, for those not familiar, Section 145 refers to the local resident requirement which every Singapore incorporated company should have. Now, the intention of this proposal was designed to actually do away with the responsibilities of an ND and imposing enforcement action. But for myself at the time, coming from a police and Ministry of Manpower background, I actually informed that keeping the resident director has a certain form of benefits. And I think that from the regular's perspective, I think it is a form of being able to take prosecution against someone rather than having no one to account for the responsibility. Anyway, it didn't matter what I said or even suggested because I'm quite certain that this section would never have been repealed as there are just too much implication in doing so. So in the early days of my enforcement work, I investigated many companies and dealt with nominee directors. And I realized one thing. When a breach or an offense was committed, a nominee director could rely on ignorance of the law as an alibi to avoid culpability. And it was true. One could rely on that and say that he or she knew nothing about the entity and get away. But is it workable in today's world? So some time ago, I think that our Attorney General Chambers, I think they reviewed the framework and updated all regulators, though it is understood that regulators may not be able to establish prima facie on a primary offense to take enforcement action. Regulators were actually expected to calibrate their investigation in order to take enforcement action on a secondary offense. And what was that? It is actually the breach in a failure to demonstrate due diligences by a director. Now, I'll share more about this as we go along. Now, is there a difference between a company director versus a nominee director? I think this is a question that many people seem to ask. I've explained that there could have been based on past enforcement framework, but the term nominee director, however, seems to appear more of a CSP jargon. I think the simple truth is, I think a director is still a director. So is it then possible or tenable to just lend a name to a CSP and have no oversight of entities? I think from a CSP's perspective, should we continue to still rely on freelancers? What about this term that ACRA seems to suggest that NDs should be appointed by the CSP and assessed to be fit and proper? What exactly is ACRA's definition of fit and proper? I think there are many, but I can only think, like for example, someone who is not a bankrupt, or maybe someone is above 18 years old, or someone who's a lawyer who have legal knowledge, or someone who have undergone through the RFA license to be considered a COPSEC as qualified. But again, if a lawyer is engaged as a freelance ND, does that mean that this person can be absolved from all fiduciary duties and obligations? I mean, well and good if nothing happens, but what if something does happen? Now, there are some common offenses or risk exposure that could render a director to be disqualified that I'd like to share. Now, there are a few that you see, but I'll draw attention to the more common ones that is in bold that we are all too familiar with. Number one, conviction of 3 or more ACRA filing offenses. Okay, now this relates to many breach, but the common ones are like failure to conduct things like, for example, annual AGMs or maybe to file their annual returns on time. So this impacts the CSP industry wide. Number two is having 3 companies that is struck off by ACRA. Lastly, which is the most important, is being convicted under Section 157 of the Companies Act. Now, Section 157 is actually the failure on a director from performing due diligences in the discharge of duties. Now, the next concept that I wanted to share is the part about the concept of debarment. Now, this is the order that is imposed by the registrar on directors or secretary where a company that's in default of a certain requirements under the Companies Act can be imposed with a debarment. So from a debarment order, as you see here, I think we can surmise one thing, that actually ACRA is now focused on imposing a restriction on the number of entities that an ND can hold. Now, a little bit about evaluation or evolution of a role of a nominee director. Now, the easiest way to understand the importance of CDD and having a robust AML CFT risk control can be summarized of cases that have occurred for the past decade. The enforcement taken against money laundering offences have not changed. I think it will continue. Some can be innocent, and of course, in worse circumstance, there are some who were actually in cahoots with the scammers. And the penalties now are quite high. The question is, can we do better? This is an actual incident I think that many of you are familiar with that motivated the regulators to actually review and enhance the various legislation to further tighten the CSP industry. Now, everyone remembers this. I think in mid-August 2023, I think 10 accused persons were arrested for money laundering activities. And in the process, their assets were seized. The parties were accused of laundering criminal proceeds, which came from out of Singapore, that were actually acquired through illegal online gaming platforms. If I remember, illegal gambling, and some from unlicensed money lending. Now, how did it all begin? From what we see, I think these all were based on certain trails that actually started from a simple thing like a suspicious transaction report that were actually filed by financial institutions. I think from these trails, I think what was detected were forged documents that were used to actually support the declarations in terms of determining the source of funds. So things like source of wealth, source of funds is something that we are very familiar, and this was detected. Now, it was through this intelligence, after connecting the dots, it actually led to the regulators, authorities detecting the involvement of a few key people involving family ties. And this led to the discovery of multiple assets that were actually seized and detected. Now, a little bit of background about these individuals. Now, if you look at the picture, the accused were all foreigners of Chinese descent. They held various nationalities and were residing in good class bungalows. Now, for all these individuals who were linked to companies, it was discovered that the entities were all shell setups. For this case, I think you all know approximately in excess of $3 billion worth of assets were seized by the authorities. Now, I think we are all surprised that in spite of Singapore's tough AML CFT risk controls, this could still happen. Now, this incident actually triggered additional probes that were conducted by other regulators. Now, there are many, but what you see are just some that I have actually collated. So what you see here are precious stones and dealers are regulated by Ministry of Law. CSPs like us, we are regulated by ACRA. The real estates were regulated by the Council of Estate Agencies, and of course, all banks, financial institutions under MAS. I think from here, the objectives of the regulators were intended to detect two key issues. The first was, number one was the abetment to money laundering offences, and number two is non-compliance of AML practices. Now, these are actually actual media reports that were linked to these billion-dollar money laundering incidents. But the questions that we want to reflect is, number one, was there a common trend in all these four regulators? What were they looking at? Secondly, is any one of these parties, were they actually connected or punished for the money laundering offences? The answer is no. What the common trend actually in this case was, it is the due diligences that was missing in these instances. So simply put, as long as there are effective risk controls put in place or demonstration of reasonable due diligence, I think that's something that what we are all actually looking for. Now, from these cases, these are articles that were taken more recently of nominee directors running afoul with the law. And such articles that you see may have unintendedly, given a negative impression of the CSP industry. But at the end of the day, is there something that we are not doing right in our KYC processes that led to these incidents? Or rather, are there preemptive approach that we can take on or to impose to heighten our safeguards, not just to the CSP and to our nominee director as well? So I'd just like to introduce a little bit to our compliance team here at InCorp. So the compliance team consists of both compliance officers as well as compliance relationship managers. As you see, the CDD team is lean and they oversee the compliance onboarding function that supports both the Singapore officers as well as that for our overseas country officers as well. Now, what I want to share with you is the area of the compliance relationship managers. Now, they are full-time employees and they are dedicated. This is a dedicated team that takes on nominee directorship appointments to support our nominee services. So for the compliance relationship managers, their core function is to adopt a more proactive participation in regular client outreach and engagements and maintain business relationship over a basket of portfolio of clients of directorship that they hold appointments in. And naturally, the key functions of this pool of nominee directors is they are expected to understand the existing legislation according to ACRA's guidelines. They are supposed to to ensure that statutory obligations of the entities that they are holding appointments are compliant. This is done by conducting regular and timely engagements with clients ahead of their statutory due dates. In accordance with best practices where possible. They also have to, for example, keep abreast on the affairs of the entity that they hold appointments in. And of course, the most important of all is actually identifying alerts or red flags of our clients in order to decide the appropriate actions to be undertaken for each client. I think from here, you can see that there are actually various touch points done to ensure that there are active tracking and monitoring done. As a result, what you see are the number of client services that we have observed, maintained to actually terminate and even strike off. We have filed numerous suspicious transaction reports ourselves, and this is based on alert triggers that we have received over the years. And of course, we have conducted investigation for some of our clients for the purpose of decision making on how we want to decide on a particular client. Now, I think some may be curious that can it be possible that if we have all these risk control measures, then we would say that in none of InCorp clients, this can actually happen against us in terms of any money laundering offences? Well, considering that InCorp has been in business since 2016, and if I were to say that there are none, then clearly I would be misrepresentation. So yes, there are a few, like the media reports shown in earlier slides. I think there are similar instances where monies that were transferred to corporate bank accounts of our clients, and these were done actually through scams unknown to us. Okay, and in some cases, some of our nominee directors were actually interviewed. But interestingly, during their statement recording, these nominee directors were able to demonstrate the compliance capabilities of InCorp and the role that they play as in how they actively monitor and track their clients. And from there, we can actually observe that the regulators were actually convinced and satisfied with the due diligences that were conducted by our NDs. Therefore, for some that were involved, there were instances where the matters were concluded and really no actions were taken. But this doesn't mean that that we can rest on our laurels. But I think that being ready is something that is paramount and is important as a nominee director in InCorp. So lastly, circling back to Wei Xiong's slide, I think it is important to note that the methodology of InCorp's nominee directors as opposed to freelancers is one that is provided by the firm. And this is intended to ensure that we upkeep the professionalism of the industry while maintaining the high level of AML, CFT, risk controls, and the objective is to align with that of the regulators and the legislation. For our nominee services, we must not forget that the presence of our full-time compliance relationship managers I would say that it adds more stability to the firm's operations and management. And above that, I think the most important aspect to safeguard our ND is ensuring that as a CSP, we have proactive oversight and monitoring of our clients. And one way of how we ensure that this is done is that the engagement of our nominee services must accompany the engagement of other services like our CorpSec. So combining with these services put together, I think we have a more robust compliance function to have clear oversight of our clients. So on that note, here at InCorp, our AML CFT risk controls, it is not just CDD's business, but it's everyone's in the firm. So we are only as good as our weakest link. So with that, thank you very much for joining the session. I wish everyone a pleasant afternoon ahead. I welcome any questions if there is. Please feel free to forward your queries, and I'll try my best to respond.
All right. Thank you so much, Wei Xiong and Michael, for your valuable insights on the changing landscape of corporate governance. Now, we have about 10 minutes for the question and answer portion, so please feel free to type in your questions by clicking on the Q&A icon at the bottom of your screen. We will try to answer all of them, but if we are not able to, due to the limited time, we apologize in advance. We have one question, either of Michael or Wei Xiong can answer. So, how does InCorp differentiate from the other corporate service providers?
Okay, maybe I'll take that one. I would say by and large, I think every corporate service provider, I mean, we strive to do our best in terms of our risk controls. But I think that what is a little bit different is the part about our nominee services that is engaged on a full-time basis. And I think the main objective of our nominee directors is to ensure that they are able to perform that, to satisfy that notion of, I think, providing that directors' due diligences, because their role is purely monitoring and tracking on a basket of clients that they have oversight in. And I think that even in the event if there are undesirable activities that occur, and if you're queried about some of the practices of how InCorp does our due diligence or the responsibility of the director, I think we are able to demonstrate that area of compliance to ensure that we are in accordance with the law. And I think I think that is key in terms of the nominee services that we actually provide. So,
Okay, we have another live question. Dear sirs, what's the legally prescribed number of nominee directorship? So either of you can answer.
Okay, I think I'll take that. So, I was actually formerly from ACRA, and I was actually overlooking at the enforcement branch back then. And I think that during my time and this was from 2015, we were debating on few things, like for example, putting what is a legal cap on the number of entities that a nominee director can hold. And 9 years have passed, and I think that we still have not derived on that magic number. And I think that magic number still has not determined by ACRA. But what I can say is I can predict that it is hard for the regulators or like ACRA to even impose a certain number of what exactly a legal number that you can say that a nominee director is safe. You can't. Whether is it 50, is it 100, is it 150? But of course, we know that the higher the number, the more the higher the responsibility of a nominee director. So I think that Singapore being a pro-business hub, I think it is difficult for the regulators to strike a balance to impose a legal number, because the Companies Act is also a legislation that is imposed in Commonwealth countries, and I think that to put in that number is quite difficult for the regulators to impose. But what I can tell you is, I think that under Section 155B of the Department Act that the Companies Act has, you can see that what ACRA is doing is they are actually imposing that restriction to impose debarment on a particular nominee director if they feel that that number is high and there are a significant or rather a substantial number of breaches across the portfolio of clients that they hold up directorship appointments in. So the debarment means that they can still continue to act as a nominee director for the company, but there is a restriction of newly appointed entities. There is a magic number that can be prescribed by law, but from inside information that I guess they are actually putting more scrutiny on nominee directors that hold in excess of 100 entities. But then again, this is only my assumption. It's not based on fact. I don't think that there can be a legal number, in my opinion.
Okay, thank you.
Yeah.
Thank you for that, Michael. We have another question. What about registrable controller? Could you please provide input in this regard, including functions and or purposes? Either of you can answer. Thank you.
Yeah, I'm trying to understand that question of registrable controllers. I'm not sure that is the question asking whether what's the responsibility of a registrable controller, or by definition, what is the legislation surrounding registrable controller. But I think that we do know that a registrable controller is a declaration that is made by a company on the actual person that's the decision maker for the company. Any comments?
Yeah, I would think that to these questions may be more related to actually to identify who are actually the UBO, the ultimate beneficial owners. As according that if let's say for all those nominee directors when they are actually being engaged, they do actually so-called they are actually legally bound, of course, to act in the best interest of company. But of course, because of the UBO relationship, all those things, they have this expectation to also represent specific interests that can actually make complicated their decision-making process. So the fact that why ACRA actually want the company to identify the so-called UBO or even the registrar controller is basically to actually highlight this point that if there is a nominee director, he is basically acting in the instruction of this the registrar controller or even the UBO that is actually engaging them for the purpose.
Okay, another live question. Does InCorp make the company pay for KYC on the client?
Specifically, we do not actually charge clients or even actually render a charge on this KYC process or those things, because as by and large is that as a corporate service provider, as a CSP, we are actually legally bound by even by the ACRA Act to do all these KYC due diligence process. This is actually part of our work to actually onboard the clients. So it's actually part and parcel. We don't actually really actually render a separate charge to do all this KYC and actually pass down the cost to the clients.
Next question that we have. Is it a requirement for CSP to carry out a yearly KYC if there is no change in the company structure or business operations?
I think that different CSPs have different practices, and we have to recognize that the review is done on a risk-based approach of the clients that we have. The frequency of scrutiny will depend more on the risk rating of a particular client. So if you have a client that is of high risk, then I think that it is important to conduct annual review of these clients. But having said that, I think that the annual review, these are textbook answers. I think that is important for a CSP to make sure that there are systems that are, or rather there are practices put in place to detect these alerts in any time during the relationship of a client for us to make a decision about a particular client. So yes, there are, but the assessment or reviews are based on a risk-based approach of a particular profile of a client.
We have another live question from Tatsuo Irani. When assigning nominee director, what kind of contract is appropriate? Is the normal service agreement sufficient? So any one of you can answer.
In the engagement of nominee directors, I think yes, there are service agreements that are actually put in place. But I think that it's important to note that the service agreements that are put in place or signed by the directors should include few key aspects like indemnity, liability, the provision of a power of attorney functions, just in case if a particular client absconds and go missing in action. The provision to actually terminate a relationship or even strike off a client, strike off a company that the client should give pre-consent when signing the service engagement. So service agreement is one thing, but I'm just looking at various other aspects that should be included in the service agreement with our clients.
Normally, these engagements of our nominee director services, basically, we have to actually meet known, and that's why there's all these indemnity letter or appointment letter that will actually specify that the nominee director will not be involved in the strategic direction and management of the company, and they will also not be actually making any decisions that will affect its operation and future. This will always in our appointment letters and indemnity letter as well.
We have another one. If the SG company has corporate shareholder, can we only register this corporate shareholder as registrable controller instead of the individual who is UBO of SG company, or we need to register both of them as controller? So either of you can answer.
So basically, in terms and the ACRA directive is that we need to actually go all the way to trace who is the ultimate BO. So if let's say for a Singapore company that is actually a wholly owned subsidiary of a company outside Singapore, basically is that we still need to actually trace who are actually the registered controller and also the beneficial owner, up to the point that it will actually go to the individuals. Unless we are actually saying that it's something like the trust structure, or even is a listed co, or if, let's say the ultimate is a listed co, I would say listed company that's actually listed elsewhere in Singapore, there will be actually some exemption on that. But by and large is that for a company that's actually pure 100% wholly owned elsewhere, we still need to trace all the way down to the individuals.
Okay, thank you. Another one. What are the key differences in responsibilities and legal obligations between company directors and nominee directors?
Okay, maybe I'll just state that. Basically, I think the responsibility and legal obligations of the company directors and nominee directors basically differ in their roles and the nature of the duties. What are some of the key this distinction? I would say that I think companies directors, they have a fiduciary duty to act in the best interest of the company and its shareholders. Basically, I think some of the duties will be the duty of care and duty of loyalty to make the informed decision and act with diligence. Of course, company directors also have the legal responsibility to ensure compliance with the law and regulation, including financial reporting, corporate governance, and also those tax obligations as well, you see. Of course, in terms of the company directors, they do have operational roles. They were involved in all those like strategic direction and management of the companies. Whereas for nominee directors, normally they will have a limited scope of authority because they are actually typically being appointed to represent the interests of a specific shareholders or even to a specific groups. And basically their primary roles is actually to act as the local resident directors to just meet the legally requirement rather to engage deeply in the company management. Of course, they do actually, these nominee directors, although they own duties to the company, nominee directors may have conflicting obligation as well, you see, because to the party they actually nominate them. And this could actually implicate their decision-making process as they need to balance all these interests. In essence, I think both types of directors, be it whether it's a company directors or nominee directors, they do share some legal obligation. Company directors basically have broader responsibility and deeper involvement in the company's governance and operation. In contrast, I would say nominee directors primarily serve to fulfill the legal requirements and also to represent specific interests, which of course it will then lead to potential conflicts of interest. Basically, I think these are the two, these are the main differentiation.
Okay, thank you. I think we have another one. What are the tools or methodologies used by InCorp for screening clients? Probably Michael.
Okay, so the tools and methodologies, I think that I think we rely. I think just like many CSPs, I think we do rely on technology to actually do our screening. And I think like for us, we use LexisNexis and Google searches to screen our clients well. And that's as far as screening is concerned, that's what we do. But I think the important question is it enough? Yeah, I think this is what we want to know. And I think that the methodology actually depends on also on the compliance capability of the CSP. So, for example, I think that in other trainings that I've conducted, I always, I've been asked the main difference between, money laundering and finance terrorism, and I think that the distinction lies in the key characteristics of both. So, for example, finance terrorism is a bit more predictable. If we screen and we detect individuals from sanctioned or operations in sanctioned countries, it's rather straightforward. We don't onboard, and we terminate relationship. Simple as that. But in money laundering, it's a little bit more different. The alerts are gray, and unfortunately, it's hard to predict when these unpleasant incidents arrives at our shores. But the thing is, I think it's being intuitive, being aware of the compliance landscape, or rather the AML CFT practices. I think it's key. I think regular training is one of them, and I think that it's important to actually understand and learn from past incidents to prevent future incidents. So, for example, maybe I'd like to just share a real story that occurred with the onboarding of one of our clients some time ago. We had a client. There was a single director and single shareholder that was intending to change service provider from a law firm to InCorp, and they wanted nominee director services, and it was only one director, and he was a UK citizen. And generally, when we did the screenings, or when we did the preliminary screenings, I think we felt that there was nothing wrong and there were no adverse media reports detected. So that was a good thing. But the only thing is, do we then stop and just accept this client to actually provide us a particular service? There was no reason to, but we wanted to be a bit more mindful, because we from past trends, I think we realized a certain pattern of companies involved in money laundering, and many of these companies had one thing: they had no corporate shareholders. They were all single directors, and it was a case by case decision, and we wanted to conduct enhanced due diligence, and we actually requested for things like their business proposal, their the client CV. We wanted to have information about their clients' contracts and invoice. We just wanted to have a look at all these things. And guess what? The clients never responded, and they never came. So they just stopped corresponding, and they didn't want to support us. So is that a good sign? I don't know. The client could have gone to another CSP provider, but it's a question mark why they never came back to us. But I think in compliance, I think it's always good to have this inquisitive nature of actually being curious about a particular client, having the interest, and not just mere screening and and agreeing to onboard a particular client. So I think compliance is a very complex area of expertise that one has to be a bit more inquisitive in order to actually avoid these pitfalls. So yeah, that's one of the methodologies that InCorp has in terms of how we onboard our clients.
Okay,
Yeah.
thank you, Michael. Any more questions from the attendees? This is the last call for all your questions. So before we end this session, if not, we have one last question. Hi, in InCorp, could we know how can a nominee director resign from a company if the foreign director is not contactable, given that S145 of Companies Act requires minimum one local resident director for every company?
Okay, I'll take that. Whoever asked that question, I think that's a common challenge that we actually face. And the simple answer is having Section 145 is actually worse than a marriage contract. That actually, even a marriage contract you can divorce, but I think in Section 145, unfortunately, you can't resign. You know what I mean? So you can only resign if there's a replacement director that comes in. But the simple answer is you can't resign. So I think the important question that that you want to know is actually what are the various risk management approach that we can adopt to actually navigate this challenge of being stuck with a client that has gone missing in action or absconded. So it varies to CSP to CSP, but these are risk management strategies that can be explored if need be. Yeah.
Okay. Thank you so much, Michael and Vaishnav. So for everyone, if you have any follow-up questions, please email us at gm@incorp.asia or visit our website at incorp.asia. So as we close off today's webinar, we'd like to thank all of you for joining us today and all of your thoughtful questions. As mentioned earlier, we will share the recording and the summarized key points with all of the registered attendees in due course. We hope everyone has benefited from this webinar session today. And once again, thank you very much, and we look forward to seeing you again at our future events. Thank you and goodbye.